Hey everyone, welcome back to Financial Market Insights for Traders. I'm your host, Sophia. Whether you're a seasoned investor or just getting started in crypto, today's episode is tailor-made for you. We're diving into one of the most misunderstood but foundational concepts in the crypto world, blockchain. Now, I know a lot of you are into crypto investing, but here's a stat that might surprise you. A significant percentage of crypto investors can't explain how blockchain actually works. That's a problem, because if you're putting your money into a system, you should understand what it is, right? So let's fix that today. In this episode, I'm going to break blockchain down in plain English, no technical jargon, no code. Just the essentials, explained simply, so you can invest with confidence and clarity. What is blockchain? All right, so let's start at the top. What is blockchain, really? Think of it like a notebook that everyone can write in, but no one can erase from. Every entry is permanent. Once something is written, it's there forever. That's essentially what blockchain does. It's a digital ledger, a record book that stores transactions. But what makes it unique is that it's secure, transparent, and immutable. And that last word is key. Immutable means once a transaction is recorded, it can't be changed. Each entry or record is a block, and every new block gets linked to the one before it, forming a chain. Yep, that's why we call it a blockchain. But unlike traditional databases that are stored in one central place, like a bank server, blockchain lives on thousands of computers across the world. These computers are called nodes, and every one of them keeps a copy of the entire ledger. So anytime someone makes a new transaction, every node updates with that new block. This decentralized approach is what makes blockchain resistant to censorship and hacking. Why blockchain matters for investors. Now you might be asking, why should I care about all this? Here's the thing. Blockchain replaces the middlemen, banks, brokers, payment processors with code. Instead of trusting people or institutions, you trust the math. Bitcoin, Ethereum, and the thousands of altcoins you hear about, they all run on blockchain. That's how they function without central banks or governments. And that's what makes crypto decentralized. So if you're diving into crypto investing, you're not just buying coins. You're buying into a whole new kind of financial infrastructure. One that lets people send money peer-to-peer, make smart contracts without lawyers, and run financial services without banks. It's a system based on transparency and resilience, and that should matter to you as an investor. Key blockchain concepts explained simply. Let's go deeper with 4 key concepts you really need to understand as an investor. 1. Decentralization. No central server. The data is spread out on thousands of nodes. If one goes offline or gets hacked, no big deal. The system keeps running. That's power to the people, not corporations. 2. Consensus mechanisms. Before anything is added to the blockchain, the network has to agree it's legit. This agreement process is called consensus. There are different ways blockchains do this. Proof of work. Bitcoin miners solve complex puzzles. Secure, but energy hungry. Proof of stake. Ethereum 2.0 validators are picked based on how much crypto they lock up. It's faster, greener. Others. Delegated proof of stake, proof of authority, and more. Understanding consensus helps you judge whether a blockchain is secure and scalable. 3. Smart contracts. These are programs that live on the blockchain. They run automatically when conditions are met. Like, if Bob sends $100, release the digital goods. No middleman needed. This is how DeFi works. Loans, insurance, savings, trading, all automated. 4. Public and private keys. When you own crypto, you don't really own coins. You own keys. Your public key is like your email address. Your private key is your password. Lose your private key. You lose access to your funds. Period. For secure crypto wallet advice, I recommend using hardware wallets like Ledger or Trezor. For everyday use, a mobile wallet with 2-factor authentication works too. Why investors need to care. Let's talk about risk versus reward. Risks. Volatility. Prices swing hard. Use smart crypto risk management techniques like stop-loss orders and balanced portfolios. Regulations. Crypto laws change fast. Ask, is crypto legal in my country? In some places, it's fully legal, in others, not so much. Security hacks are real. Always store long term holdings in cold wallets. Don't leave everything on exchanges. Opportunities. DeFi. It's like building a financial system without bankers. Smart contracts run everything. Lending, borrowing, earning yield. Staking. Earn passive income by locking up crypto in a network. Annual returns can be solid. NFTs and tokenization. Think beyond coins. Blockchain is being used to manage ownership of digital art, real estate, music, even patents. How to research altcoins. Everyone wants to find the best cryptocurrency to invest 2025. But let me be real, most altcoins won't make it. So, how do you spot the winners? Here's what I do. Read the white paper. It's like the startup pitch deck. What's the mission? Is it even doable? Check the team. Are they visible, experienced, active? Community activity. Is the project buzzing on Discord, Reddit, Twitter? Hype is one thing. Sustained engagement is another. Tokenomics. How many tokens exist? Who owns them? If insiders hold too much, that's a red flag. Roadmap and use case. Are they hitting milestones? Is there a real-world application? I also use tools like CoinGecko and Messari. And I never invest based solely on what an influencer says. Crypto trading strategy that works. Here's how to trade smarter, not harder. Dollar cost averaging. DCA set a regular investment schedule. You avoid buying all at a high. Exit goals. Know when you'll take profits. Don't get greedy. Diversify. Spread across sectors like DeFi, Layer 1s, gaming. Stay informed. My personal favorite? Podcasts. One I highly recommend is the Crystal Ball Markets Crypto Podcast for beginners. No fluff, just smart insights. Getting into margin trading. Ready to go beyond basic buying and selling? Margin trading lets you borrow money to amplify your trades. Sounds great, right? But be warned, losses get amplified too. So know your limits. Use stop-loss orders. Have a plan. Stick to it. Want a beginner-friendly platform for margin trading? Check out crystalballmarkets.com. They've got a user-friendly layout and built-in risk controls that help protect new traders. Final thoughts, know what you own. Look, blockchain isn't some magical buzzword. It's a tool, a powerful one. And as an investor, your greatest strength is understanding what you own. The more you know about how blockchain works, the better you can. Spot promising projects, avoid scams, and build smarter crypto strategies. So whether you're looking for the best cryptocurrency to invest 2025, figuring out how to research altcoins, or just learning the ropes through a cryptocurrency podcast for beginners, start with the foundation. Understand the tech. Because in this space, knowledge really is profit. That's it for today's episode of Financial Market Insights for Traders. If you found value in this, please hit subscribe, share it with a friend, and don't forget to check the show notes. For no-nonsense market commentary, subscribe to the Crystal Ball Markets podcast, ideal if you're just starting out in crypto. And if you want to test the waters with crypto margin trading, explore crystalballmarkets.com, built for beginners with safety in mind. Until next time, I'm Sophia. Stay curious, stay smart, and keep trading with purpose.